On today's Hashi, I'm discussing the increased demand for fixer-uppers, a 17-year low for home flipping profit margins, and wage growth outpacing rents and mortgage payments. Today is Tuesday, September 23, 2025. I am Byron Lazine, and the Hot Sheet starts now. Live from Scottsdale, Arizona, here at the Talking Stick Resort, where we'll be staying. I think most people are staying here for BAM Camp that are traveling in and that are not already local. Looking forward to seeing everybody who's attending BAM Camp tomorrow. VIPs, I'm looking forward to seeing you tonight at our happy hour dinner. We've got our mastermind session in the morning, and then the main session tomorrow afternoon. Just really looking forward to BAM Camp. It's going to be an amazing lineup. There's so much packed in there. I mean, I was saying to both Eric and Anthony Navi Title, who partnered on this on BAM Camp with us yesterday, as we're just running through some things. I'm like, there's so much packed in here. I'm almost afraid there's too much, because people are going to be walking away like, wow, there's just so many different things that were packed into such a short period of time. So really looking forward to seeing everybody, enjoying a couple nights with those of you that are coming here into Scottsdale for BAM Camp. We are ready and looking forward to that. All right, Hashi, I will be doing a Hashi tomorrow before BAM Camp. So we're going live actually from the venue tomorrow. 6:30 here local time, 9:30 obviously on the East. So there will be a live hot sheet per normal tomorrow. Thursday looks like it's not going to happen with travel complications. So typically we do the show every single Monday through Thursday when the markets are open. It's the only Monday through Thursday live housing show for real estate professionals that exists on the internet. If you're getting value from this show, consider sharing it with somebody who you care about in the real estate industry. It doesn't even have to be an agent, could be an attorney, an inspector, somebody who wants to be more knowledgeable about the economic conditions impacting housing and impacting professionals, and what we should know moving forward on a week-to-week basis. I mean, I'm just so obsessed with having fresh, relevant information, new angles, new stories, just tweaking the ability to have a better conversation with customers each and every single day. So thankfully that you guys are joining me here to be able to provide that and do that with you guys here each and every single day. All right. We got a couple stories here. Realtor.com kicking us off. Realtor.com reports that fixer-uppers right now are receiving 52% more views than similar homes. Now, this makes sense. I don't know if any of you guys caught Sharon Travatsa, BAM board member, will be delivering a final message here at BAM Camp in his keynote tomorrow. But I don't know if you caught his Instagram recently. I think it was yesterday. It's collabed on the BAM account. You can go to @NowBAM on IG to find it. But Sharon was walking through this increase in Google searches on, everyday people who are like, need mortgage help, concerned about basically paying their mortgage, and how to obtain more, all these different types of questions and concerns. This confidence level that we know doesn't seem to be growing quite yet. There is some level of optimism that if rates move down in 26, you could have a big year in 26. Fannie Mae reports that we're going to have a 10.7% increase on existing home sales. All right, so we know this. We know there's a possibility for a lot of optimism going into next year. We've seen spurts of momentum on the 30-year fixed. We've also seen moments of time like we did last week where Jay Powell can, kind of interrupt that momentum with lack of plan, with no clarity, with questioning his own projections, with the proclamation that he has no confidence in the things that he's even saying, which is certainly concerning to have your Fed chair have little to no confidence and call everything weird and uncertain. I find that weird that a Fed chairman would stop momentum that can help solve the red flags that we're seeing right now. The red flags being a weakening labor market, the red flags being what Sharon was talking about yesterday, where consumers are just like, man, it has been 3+ years. I thought rates would be lower by now. I need help. And so going back to this realtor.com report, it only makes sense to me. And I've got actually a new name on the back end. Maybe if you guys are a BAMX member, you know that this is probably not a new name. She's probably helped you out with something at one point in the past, but I've got Jill on the back end here. Jill, I think it will make sense if you're able to help share some of this stuff with me. You can share right out of school if you'd like. If you go to for BAMX members, if you go to school and you go into classroom and you click on hot sheet, each and every single day I release all of the different slides that we use on this show directly to you. But if Jill, you can grab that first slide and share that. I think it's going to be easier for you than it is for me. Bobby will be with me tomorrow, Bobby and Haley. So we're gonna be back to full setup mode from the venue tomorrow. We're looking forward to doing a hot sheet before we kick off the event here. And yeah, so here you go. Here are the way Realtor.com is collecting the data to identify what they would call a fixer-upper. Okay, so Realtor.com, obviously, just an enormous amount of data flows through that portal. They get a ton of consumer data. I've also offered up Realtor.com is going to be out here supporting BAMCamp as a sponsor. We never have sponsors at any event that I'm not a paying customer to, or a BAM creator is not a customer to, but I'm a paying customer to Realtor.com. And I understand that the customers that come through there are typically very vetted. Anyways, this is using their data, the way that they're looking at the words that are in a listing to identify fixer-uppers. So common listing description language used to identify fixer-uppers. Fixer-upper, needs work, could use some TLC, good bones, project home, handyman special, renovation ready, needs some love, damage, bring your imagination, roll up your sleeves. You can drop that off, Jill. It's inside of School for BAMX members. If you want to grab that and utilize that, you can download that, whether it be on the app or on your desktop. Those words are what they're looking for to identify where the opportunities are in the market. And right now they're getting 52%. 52% more page views. The fixer-uppers are priced 54.4% lower than the median single-family home in the U.S. They tend to be smaller and they tend to be older. That 52% increase on page views tells you something about where the market is right now. We have 1995 GFC, Great Financial Crisis level of mortgage applications happening. So we do have less demand. Everybody said we need more homes and more homes and more homes. Well, when a mortgage has been accelerated well past what have been expectations leading up to the last 3 years, it slows down that demand, and demand doesn't pick up when you have what is perceived by customers as an elevated rate that they don't want to approach. So when you get a price of a home fixer up that's 54.2% lower than the median single family home, and you offer that opportunity in the marketplace, page views goes up. It only makes sense. It also tells us something about the mindset. How do I find a deal in this market where over 40% of homeowners own their property cash? They've got no reason to give a massive discount on the home. Even if there's somebody that needs to sell, they'll take some more time. And we've seen DOM increase. We've seen time of transactions increase. And in fact, we've seen cancellations. June Redfin reported was the highest level of cancellations. Why is that? Well, because buyers go through an inspection. They're like, hey, here's my moment. I'm going to negotiate. This is a market that's slowing down. This is a market that I can work with. And they start to negotiate in that inspection. The seller says, I got a 2.5. I own my house cash. I'm not negotiating with you. Get lost. And you see cancellations on the rise. So buyers are saying, where can I get this deal? And they're looking at fixer-uppers, okay? And fixer-uppers perform really well on the market because not only do those buyers, and Joe, you can grab the fixer-upper share of listings where we're seeing the most of them, but not only do those buyers have to compete with other buyers who are thinking the same way. Hey, if I get a fixer-upper and I can move, I can save some money and make this deal. They're also obviously, negotiating against investors. And that's where you get into the whole part of the web, which says investors shouldn't buy real estate. And, I'm a full free market guy. So I would say investors, and you should be an investor. You're in real estate. You should be investing in real estate. It's pretty practical. Investors should exist. You shouldn't be regulated to one home ever at a time in your life. But here are the markets where there's a fixer-upper share of listings. We have Syracuse at 11.5%, Toledo, Ohio, New Orleans, Jackson, Mississippi, St. Louis, Albany, New Haven, Connecticut, Detroit, Michigan, Dayton, Ohio, and then Buffalo. There's your top 10, all at 9.5% or more. So investors, if they were to ask you the question, where can I get deals? These 10 markets are offering a higher level of fixer-uppers. If we look at the next one, Joe, fixer-upper discount, this is BAMX members, this is just inside of your hot sheet classroom. Yeah, go to the next one there, Joe. Fixer-upper discount. Jackson is offering a 77% discount. So remember, the national average was 54%. Jackson, Mississippi is coming in at 77.7% of a discount on their listing price versus the median listing price in that market. St. Louis, 68%. Birmingham, Alabama, 67%. Pittsburgh, 67%. Toledo's coming in at 66%. Detroit at 65%. Dayton at 62.5%. Little Rock comes in near 60%. Wichita, Kansas at just about 58%. And Kansas City, 56+% of a discount. So really interesting there that these discounts in those 10 markets are obviously surpassing that national average. Okay, so if you go to the next one, fixer-uppers, they're more common in markets where new construction is limited. Just zoom in a little bit, Joe, when you bring these up. Yeah, there you go. Fixer-upper is more common in markets where new construction is limited. So it's why you see a lot of Northeast, Syracuse, Albany in that top range there. Even the Ohios, you have less inventory. And then that fixer-upper share, shrinks in those markets where, I'm sorry, the fixer-upper, I had that backwards, but the fixer-upper inventory increases in those markets where there's less inventory. That's why you see the New Yorks, the Ohios there at the top. And then you see those builder markets moving to the right with a larger share there. Phoenix, Memphis, and Raleigh, and those types of markets there. All right. Speaking of opportunities here in the investment world for real estate, and you may be working with an investor now, the reason why you're probably not seeing as much investor activity as you have seen in the past, Adam reports that home flipping profit margins have now hit a 17-year low in the second quarter. Okay, so right now, this has been a trend that's continued. If you want to show U.S. home flipping trends right now for U.S. single family and condos flipped and the home flipping rate, Jill, both of these trends are moving down, and they have been moving down, since 2020, 21, and 22. So the home flipping rate, the percent of total sales right now is under 8%. That percent right now is at 7.4%, accounting from April through June. That's down from the first quarter last year. Flipped homes in the first quarter last year accounted for 8.3% of all sales, and it was 7.5% in the second quarter of this year. So that number, slightly down from that, 7.4. That number is moving down, and it's been moving down over time. The percentage of flipped homes in the market, it's tough. I mean, there's a lot of page views being increased on these fixer-uppers, and you're competing with, buyers who want to move in there, other investors. It's hard to get the numbers to work right now on a flip. With obviously, if you're borrowing money, it becomes even harder with where the rates are at. And that's why you're seeing these numbers move down. In the second quarter of 25 in the U.S., the home flipping report showed that it was about 78,600 plus single family homes and condos that were flipped during that time during the second quarter. Profits for home flippers, Jill, if you want to show the next one, have also been decreasing. Okay, the trend on their gross ROI is well off of where they were. Certainly during those cleanup years right after the great financial crisis. I mean, those are some of the best years for flippers. Everybody kind of fell in love with flipping in that, 09 to, 15, 16, 17. There was a really good run for flippers during that stretch, and you see their gross ROI, at an elevated level there. Now, gross profit for flippers today is still up near 50%, but that gross return on investment is what you've seen really come down in recent time here. If we look at some of the metros here, the metros, largest metro areas with the smallest profit margins, Austin had a 5.5%, San Antonio, Dallas came in at 9.3%, Raleigh 10.3%, Salt Lake City 10.8%. High competition there in those markets. You typically will see, a flipping company that's moving more than kind of your mom and pop flipper who might have one or two flips at a time. They're moving 10, 11, 15 in those markets. And so when you spread that out over 15 homes, you can drive down your profit margin. 5.5% is risky because the market moves just a little bit there in Austin. You can find yourself in trouble. Typical markets with the largest typical profit margins, second quarter, Pittsburgh, which Pittsburgh also showed up on that list in the previous report there from Realtor.com, having one of the largest margins under value of median price homes on the fixer uppers. So like if I'm thinking I'm moving to a market to buy fixer uppers, to flip, to do investment deals, Pittsburgh has to be one of the names using data that's on the list. When Ryan Serhant was interviewing me last week at his event on a fireside chat, he said to me, he asked me a question about what would you do if you were a brand new agent, or if you were restarting, you lost everything, you're starting from zero, you've got no leads, you've got no database, you have nothing, and you're starting over. Okay, what would be the first thing you do? And I said the first thing I would do is pick a market. Most people end up selling or investing where they grew up or where they currently live. And there's obviously going to be family restrictions to that you have to account for and all of that. But if you were like, if I'm being literal with the question, if you have nothing and you're going to become an agent, how would you start? Well, number one, it has to be pick a smart market. And using the data right now, if you're going to start a home flipping business, we just looked at two reports back to back. Pittsburgh is interesting. Certainly, you've got a high profit margin, and you've got one of the biggest margins of underpriced fixer uppers compared to median homes. So the profit margin in Pittsburgh, 106.8%. Okay, so if you know what you're doing in flipping, you know how to position and market a flip, that's a market to think about. Shreveport, Louisiana, probably butchered that, 104% profit margins. Scranton, Pennsylvania, 104%. Kalamazoo, 100%. Buffalo, 91%. So there's where the areas where you get these typical bumps in profit margin. But it's a long haul right now. If we go to the next slide, Jill, on school, the timeline for flippers right now is up to 165 days. So, we talk about all these things changing all of our lives, making everything faster. We've got a computer in our pocket that, was more computerized than whatever got to the moon back when they went to the moon. We got all this stuff. But at the end of the day, from the year 2000 to today, the last 25 years, it still takes a long time to flip a home. And if you're doing it right, if you're rehabilitating a home, I'd argue, then it probably takes even longer than this. 165 days right now, second quarter, was the average timeline according to Adam on flipping homes. Okay. Home flippers right now are attracting more FHA buyers. And Georgia counties right now are leading in flipping. So still strong activity, but profits continue to move down. Typical gross return on investment continues to move down. There's still high activity, high interest in flipping, but you're not going to see that really take off in a meaningful, substantial way until those rates obviously move in a better direction for home flippers. So the trend continues to move in a negative way for flippers. All right, let's move to this last report here from Redfin about wages. I bumped this from yesterday to today, just giving the timeline, the Compass and the Compass news from yesterday, which I've shared. A quick reaction on my IG. You could go check it out, or you could watch the replay from Hot Sheet, which was a reaction. I obviously want to do more this week on that. There'll be a Knowledge Brokers podcast at the end of the week. Me, Tom, and Lisa, between that and this little lawsuit, we're like, hey, we got to do a Knowledge Brokers, even though it's going to be the end of the week. BAM camp, everybody's going to be traveling, but we are doing a Knowledge Brokers pod. It doesn't look like there's going to be a real word here today, giving some of the timelines. But in any event, you can check out my instant reaction on the replay of the Hot Sheet tomorrow, and then a deeper reaction at the end of the week with Knowledge Brokers. But I do want to get to this report here. Wages are growing faster than rents and mortgage payments, which is really interesting. And Jill, you can show that first slide that's in school. It's interesting because, and I mentioned that Sharon post from yesterday where people are, the Google searches are up at the same level of 09. And there's certainly something to pay attention to, and it's alert that we need to be aware of. But in the reality, some of the trends that I'm seeing, and I'm not disagreeing with my good friend and BAM board member Sharon, but a lot of the data that I'm looking at suggests that inflation on housing has come down. The only person that doesn't really understand that is Jerome Powell. And this data here shows us that wages are actually growing faster than the housing costs. Now, it might not be the housing that somebody wants or desires or dreams of, but there's seasons in life, obviously, for everybody. And Jerome Powell, remember, doesn't care if consumers are renting or buying. We do. I certainly do. But the median mortgage payment growth is at 0.2%. Now, I get it. We need to account for how high rates went starting in 2022 when the Fed started to play catch up. But the growth right now is at 0.2%. Median asking rent growth, rents have gone down 25 consecutive months, but asking rent growth is up 2.6%, while the median hourly wage growth is up 4.1%. So I'm offering this because if things continued for a long period of time to stay, around 6, but you're seeing that rent growth and mortgage payment growth was not growing, yet wages were, that would chip away a little bit. It's not going to solve the problem, but it would chip away a little bit at the affordability issue I thought it was interesting. You can dig into my hot sheet notes on School if you're a BAMX member. Go to school.com/BAMX. You can grab all of our charts, including this one from our partners over at Zudelio, who are going to be here. They're located right here in Scottsdale. They're going to be here at BAM Camp. Jill, if you want to show the top 10 housing markets for cash offers, Zudelio has more information on cash offers that are happening in the market right now. I'm just seeing so many agents utilize the Zudelio platform, which you get as being a BAMX member. We're literally paying you to be a BAMX member, $2,400 a year value in the Zudelio platform. On top of that, you get Mosaic's platform as being a BAMX member. We're paying you to be in BAMX. School.com/BAMX. Absolutely crazy deal. But just in line with all of these, this investment report that we have here today, 40+% of homeowners own their house cash. And the investors that are getting some type of a return, we saw Adam report here today, investors are not getting a big return. The ones that can go cash are able to make a better deal. And here are the top 10 housing markets in the last week, according to Zudelio, where cash offers are happening. Las Vegas, Raleigh, Phoenix, Atlanta, Dallas, Jacksonville, Philadelphia, Orlando, Houston, and Columbia, South Carolina cracks the top 10 here over the past week. Right now, we've got entering here today, we've got a 30-year fix that was at the same level as we ended the week last week, coming in at 6.35. The 10-year is literally unchanged from yesterday, just sitting at 4.139. So as investors in the markets await more data that might put Powell into a position of certainty as opposed to waffling, the markets kind of seem stuck at where we're at. We've lost all that momentum of that year-to-date low of 6.13 on the 30-year fix. It evaporated in minutes with Jerome Powell's commentary last week. We're back to 6.35. It's the good news. It's under the 50-year average of 7.55. And I would consider that on the lower third of where we've been over the last 3+ years in this real estate recession. That is mostly rate driven and money printing driven, which is why the rates have had to go up so high. Right now, CME Group says 90+% chance that we'll see a cut, obviously, at the next meeting, which is quite a ways here from today. What are we at? We're probably 40 to 36 days, 92% chance from CME Group. Polymarket has an 83% chance that is a 25 basis point cut, and a 4% chance that's a 50 basis point cut. Okay, if you're kind of bummed that you're missing BAM Camp here today, tomorrow, I hear you. I will be live with you guys tomorrow, 6:30 here Pacific time, 9:30 on the East, with you for a live hot sheet from the venue. There won't be a hot sheet on Friday, but I will be going live before the event with all of you. And if you do want to catch me live, the next time you can do that would be in Denver on October 24th at the Fusion Rally 2025. We're less than 30 days away now from that event, Fusion Rally. I'll be giving a keynote there in the morning of October 24th. I don't know if Jill can drop a link down below. BZ25 will get you 50% off of the early bird pricing. So if you're driving distance from Denver, to me, this is a no-brainer for this event at the price point. And I'll be there on October 24th. So if you're missing BAM Camp, come check me out there. There'll be a link in the replay, and use code BZ25 to get the BAM deal on that. All right. I will see BAM Camp attendees either tonight and or tomorrow morning. Looking forward to that. And until then, till the hot sheet tomorrow before we kick off BAM Camp, of course, toodaloo.